Interview. Dirk, this was always going to be a tough one because you are lapping a very strong quarter this time last year. But talk about what you saw globally in terms of the appetite for snacks.
Well, globally, obviously, a very good quarter. Last year, we grew 6.1%. This quarter, we're growing 3.8% on top of that. If I go around the world, what we saw was emerging markets coming back, which started last year in the first quarter to show some signs of the effect of COVID. They're back in a big way, growing almost 10%. We see very strong growth in China, in India, Russia, Brazil. So that was very encouraging. And then in the developed markets, Europe and North America, lapping a very strong quarter last year, it was stronger than expected. We knew it was going to be a tough quarter for them, but overall, the growth was better than expected. If I look at the different categories that we're in, and we look over 2 years these days, because it doesn't make a lot of sense to just look at last year. So we look at a 2-year CAGR. And so, for instance, biscuits up 7.5% on average per year for the last 2 years. Chocolate up 6.5% on average for the last 2 years. Our meals and powdered beverages, same 7%. The only one, but it's only 5% of our sales that is affected still, is gum and candy. It's down 16% over the 2-year period. But that is normal because the consumer has a lot less mobility, and those are typically consumed when you're on the go. So strong in emerging markets, which is great, and strong in our core categories.
Strong for Cadbury, double-digit growth there. That was all Wilfred. High single digits for Oreo. That was all me. Dirk, as far as the guidance, 3+% organic revenue growth is what you're putting out there. What data are you seeing from the consumer about whether we'll continue to see this appetite for snacks and for packaged food as people do go out to restaurants more and go out to bars more, especially as we've seen it happen in the U.S.?
Yes. Well, the first thing that we see is when we interview consumers, 30% still says that they're snacking more than last year. And last year, we had the vast majority saying they were snacking more than the year before. So they're still clearly snacking more. And I think the reason for that is that, yes, we're going back to normal, but it's clear also that for consumers, going back to normal is not going to be the same normal as before. They see the whole thing that happened with COVID as a major trigger for change in their personal and in their business lives. They're going to go less to the office. Most companies, I think, will accept that people don't have to show up 5 days a week anymore. They want to spend more time at home, which leads to more snacking. And so I think going back to normal, yes, maybe compared to last year, but it's not going to be like it was before, and that's going to help us.
What do you project happening here with margins and on the cost side, and what consumers will ultimately have to pay in terms of higher prices? We've seen so many price increases across the category.
Yes. Well, every year we make an estimate of what we think the inflation will be. And what we're seeing this year is that the inflation we had planned for, it's going to be more. Not a lot more, but it's going to be more than what we had originally foreseen. And as we make our yearly plans, every year for us as a company, that includes price increases. It's not unique to this year. And what we originally had planned for this year was similar to other years of price increases. With this slight increase that we're seeing in our inflation, we will have to increase prices more. We've already done that in a majority of markets around the world. But it's not going to be an overwhelming price increase. It's going to be very manageable for us and very manageable for the consumer.
Dirk, just very quickly, you mentioned India was strong last quarter. What's the latest there with the big spike in cases?
We're obviously, first of all, my heart goes out to what's going on in India. We're a big business in India, and to see what's going on is heartbreaking. And of course, we as a company, we're trying to do whatever we can. And we've just committed to $2 million of aid for the healthcare workers and for medical equipment. Strangely enough, our No, and probably understandable. Our business was very strong in the first quarter, and we are going to see the same thing in the second quarter. That's everything we're seeing at the moment. And the reason why that is that life goes on. Consumers tend to go more to packaged goods, to goods that they feel certain about. They go to big brands that they trust, that they have confidence in the quality. And so we believe that is the underlying driver of very strong growth that we saw in India in the first quarter that will continue in the second quarter.
Shepard Smith here. Thanks for watching CNBC on YouTube.